everyone and welcome to Inderes TV. Today we're going to talk about CapMan and that's why Sauli Vilén is here. Hi.
Hi.
So Q2, how was it? Was it bad? Was it good? Was it something in between?
It was neutral, you could say. There was nothing special in the report. Yes, the headline result fell greatly from our expectation, but that was purely because of the fluctuation in the investment portfolio. And obviously the investment portfolio fluctuates a lot between quarters, and I mean there is not really much point to try to estimate the quarterly basis the investment income. You of course you need to look at the investment income on the longer term basis, and thereby the meaning of that profit fell from estimates for the investors or for the value of the company. It doesn't affect that. So okay report, nothing special there. Basically.
Nothing special. Neutral. Yeah. So how would you describe the market conditions for CapMan at the moment?
Market is tough.
Yeah.
For the alternative asset or private asset, whatever you want to call it, it's definitely tough, especially on the real estate side. But overall, the market is tough. That is because of the exit market has been really slow for a prolonged period of time, and because of that, the fund managers have not been able to exit their investments at the pace they would like to, and because of the lack of exits, there has been a limited amount of cash returns for the investors, and because investors don't receive cash they have expected to receive, the allocations for the private assets have actually been going up. Okay. And the allocations are in many cases hitting the limit actually, and so forth, and because of the tight allocations, you could say, and the limited cash flows, it is really difficult for the managers, for the investors to make new commitments for the new funds, of course. Funds, yeah. So that's why, and at the same time, there is also a record number of fund managers trying to raise capital. Mm-hmm. So in that sense, yeah, the fundraising market is really tough. Yeah, you could say.
So what about can you see any ease in the horizon, or what's the?
Maybe the market is maybe starting to move to the right direction. So obviously the interest rates have stabilized, you could say. So the interest rate outlook has it is more, and obviously the interest rates are the main driver, especially the real estate side, since obviously real estate is super sensitive for the changes in the interest rate environment. So and of course if you look at the overall capital markets, like we are at all-time high basically everywhere except Helsinki, but every in US, Nasdaq, DAX, basically. So of course that will eventually lead to a situation when there will be more IPOs, more exits on the private equity side. Of course, that will also work in the real estate side. So there's market should start to ease at some point. But when does it happen during H2 or next year or so? Your guess is as good as mine. But but if you look at those basic fundamentals, building blocks, what are driving the market? Yes, there should be. There should be a clear road for easing at some point, of course.
Yeah, somewhere in the future.
Yeah, somewhere in the future.
So what about the outlook for the rest of 2025? In terms of fee income, the company is really clearly behind schedule and they will really have to make a run for the money, I mean.
H2 of 25 is a super important period for CapMan. Not because of the guidance, why will they reach the fee profit guidance or so. It is because of the fundraising. In H2, they have two, or basically actually three, if you count the new private real estate debt fund. They have two, or if you take that into account, three flagship funds at the fundraising at the same time, and those are the funds where they are like must-win battles. You could say you must succeed in those fundraisings, and I mean, even though the market is tough, there are still commitments to be made. Of course, investors are committing capital all the time, not like they did like 3 or 4 years ago when it was booming, but still they are committing. Yeah. But they are more careful. And when the money is really scarce, obviously the money will go to the managers who have best track records.
Yeah.
So and that makes kind of sense, right? So in H2, CapMan needs to needs to like prove that they belong to that group basically, and then that they can actually excel in fundraising in even more difficult market. And that's why, I mean, obviously those funds are key for driving CapMan's value in the future. So obviously they will drive CapMan's growth, etc.
Yeah.
We can go. I guess we come back to that later. But that's why the H2 is a super critical period. And yes, about the guidance. Yes, if they succeed in that, they will reach the guidance. But I mean, the guidance reaching or not is a minor thing. If they fail in the fundraising, the guidance thing is like it's water under the bridge, so to speak, since it's a much bigger thing that why you cannot raise capital to your flagship funds basically.
Yeah.
It's basically so super important months ahead for CapMan, obviously.
Yeah, it will be interesting to watch how they
Yes, most definitely.
Okay, so CapMan has been very active on the M&A front this year. 2 companies already. So do you think this will continue in the future?
Yeah, want to highlight that the other transaction, the Midstar one, it's actually CapMan's one of CapMan's funds did that, but CapMan was a facilitator in that. They also used their own balance sheet in that. I still count it as an M&A move, even though it was in one of their funds. But yes, they have clearly put pedal to the metal in the M&A field. Yes, most definitely. Yes, on your question, yes, they are continuously looking. Yeah. They are active. They are interested to do more. There is not like both of those transactions. They do not limit CapMan's ability to do more if the right target would rise up for somewhere. Yes, most definitely. And that's why yes, I really think they are looking, and they are also interested on even a larger acquisition. Larger, like it doesn't have to be acquisition. It could be a merger or anything. CapMan is active in that front. Mm-hmm. But at the same time, it is worth to note that CapMan doesn't need to do anything. They have all the necessary building blocks to grow shareholder value, notably during the past 3 years or so. So they are not forced to do anything. And in that sense. But let's put it this way. I give fairly high probability that during the next, let's say, 3 years, CapMan will do something again. Obviously, it's super hard to pinpoint exact timing since it takes two to tango. But in that kind of time period, I'm fairly confident they will eventually do something or be part of the bigger transaction.
So they don't have to because they have all the building blocks, but they are actively looking and something will happen.
Yeah. That's, and of course they have a balance sheet to do it, etc. So that's usually the case.
Yeah. So I will use your own words. The challenge at the moment is that the asset under management performance is far from its potential. What would you like to see from CapMan in order to turn this in the right direction?
Yeah, basically what I mean by that is that the fee profit that the CapMan can earn from their current asset under management pool is fairly low. Mm. The fee profit is not where it should be in the future, basically. And if you think about the whole CapMan's story, the fee profit is key to basically everything, you could say. Mm-hmm. That I mean, CapMan needs to grow significantly in the future, and if they grow, the fee profit
will follow.
Yeah, it most definitely should follow. Mm. And if in this growth, obviously the flagship funds, which we discussed, are the cornerstones, those and one other flagship fund. So if they succeed in the fundraising of the flagship fund, the top line will grow. And when the top line grows, they have all the tools necessary basically to scale up the fee profitability notably. Yes, you need to keep tight cost control. That is not an area where CapMan has historically excelled. But at the same time, in this business, asset management, the scalability is super, super high. So I mean, they said that. So that's why even though and of course CapMan has also taken more focus on the cost control side. So I'm fairly confident. I'm actually very confident that if the growth comes through as we expect, the fee profit growth also will follow there. And of course, the fee profit is the most lucrative part of CapMan's business. It's the super stable, predictable income from years to come here, right?
Yeah, it is.
But yeah, so in that sense, yes. So, and it also, as you were referring to my valuation thesis, the point is that the price what you pay for CapMan current valuation is actually fairly low if you look at the AUM basis, but that is because the fee profitability is low. But when it comes up, there also should be a repricing how much market are willing to pay for CapMan's AUM.
Yeah. So could you elaborate a bit more about the valuation?
Yes, most definitely. Most definitely. Yes, basically, CapMan has 3 profit cylinders, you could say.
Yeah.
The free profit, the most lucrative and important one. Then you have the investment income, you have your own balance sheet, and finally you have carried interest, which we didn't discuss yet. So as we were currently, the situation is that the only cylinder what is really working is investment income. It's okay-ish level, but the fee profit is not where it should be, and also carried interest is fairly low. Carried interest means performance fees, basically.
Yeah.
But what we expect to happen during the next 24 months or so, when the fee profit comes up as we speak, it also should ignite, and also at the same time the carried interest or performance fees should also kick in, because of course when the exit starts to happen, then the fund profits will realize, and of course over the long term in this business you need to earn performance fees. Since if you don't, that basically means that your funds are not performing as they should be, right?
Yes.
And of course that in this business, alternative assets, thematic funds, you are as good as the track record of your funds.
Oh, yes.
That is just the nature of this business.
Yes.
So in that sense, but yeah. So basically, when all of these the 3 cylinders kicks in, valuation is really cheap.
Yeah.
Valuation is, you could say, outrageously cheap, to be honest. But at the same time, when only one cylinder is working, the valuation it's not too tempting. It's neutral. It's neutral at best.
Mm-hmm.
So I mean, yeah, that's basically valuation. I want to see more hard evidence that CapMan can excel on the fundraising on the near future.
Yes.
And get the fee profit growth kicking in through that, and of course then the carried interest also is another line I really would like to see tad more concrete proof there. But yeah, but once the growth starts to kick in, then the share starts to look really cheap really fast, actually. But yeah, that's the valuation. At the same time, one thing I want to highlight also is that, of course, as most of the asset managers in Finland, CapMan also is a good dividend payer. The dividend is hovering around, I think the dividend is hovering around, yes, I can check there, it's almost 8%.
Yeah.
So that really limits the downside of the share. I mean, since the dividend is, you could say, rock solid, CapMan's balance sheet is really strong, especially after the latest transaction when they divested their service business. So in that sense, the dividend yield gives you nice buffer there while you wait to growth to kick in. But yes, as I said, it's really interesting couple of quarters ahead for CapMan, and let's see how they excel the fundraising in the difficult market.
Interesting quarters ahead.
Yes.
Thank you so much, Sauli.
Thanks.
Thank you.